Hey, what's up guys? My name is Siddarth Shetty and I welcome you all for a very important learning video where we are going to discuss on an indicator called as RSI or Relative Strength Index. Now, we all might have heard about RSI divergence, bullish divergence, bearish divergence, but how exactly this works, we are going to check out in this video. So make sure you watch this video completely so that you get the complete insight. And also to mention, the content which I share on this channel is purely back tested and I personally use it myself. So it's not that I simply randomly come and tell the things that I don't use. So make sure you watch this video completely and I'll see you in the outro.
Alright guys, so let's start the video. So today we are going to learn about RSI indicator, that is basically the relative strength index. Now if you just go to Google, the definition says that the relative strength index is a momentum indicator used in technical analysis that measures the magnitude of recent price changes to evaluate the overbought or oversold condition in the price of a stock. Now, in simple words, it is an indicator which describes the momentum of a stock. Okay, and the momentum of the stock can be determined from 0 to 100. Now, to make you all understand, I'll just show you in the chart. Now, before we go to the chart, there are basically different types of divergence. So basically we can classify into four types. So the four types of divergence are: the first one is the bullish divergence, then the bearish divergence, hidden bullish divergence, and hidden bearish divergence. Now one of the most common divergence where majority of the traders including myself we use is the bullish divergence and the bearish divergence. So in the end I will tell you which divergence has more probability. All right, now in this video we are going to talk on bullish divergence and bearish divergence. Now going to trading view, the chart shown here is of IndusInd Bank. Now I'm going to add an indicator called, if I just search over here, RSI, it automatically pops and you just have to select this, and something like this comes, a graph kind of a thing. All right, now initially whenever you open an indicator, what first thing you have to do is you have to go to the settings and you just have to explore whatever you know. Now there is a formula of relative strength index which is of no use for us. We just have to learn what is that indicator telling us and what data we will be extracting from that indicator. Fine. Now going to the settings of RSI, if you just click on this settings, you can see that there are n number of things ticked. So I don't want any of this. I'm just going to turn on in inputs. I'm going to keep this RSI strength to be 14, source close, and moving type simple moving average, everything as it is. All right, and in style you are going to turn off upper Bollinger Band, lower Bollinger Band, all these things you do not need. You need to turn on mandatorily RSI. This has to be turned on. You don't even need this one. Okay, RSI based MA. MA is basically the moving average. You don't need to do any of that. And then coming to visibility. Visibility again, keep it default. All right, so one more setting which is very important. You have to go to RSI upper band and you have to make this 80. All right, and then you don't need to keep this middle band, just untick this. Then there is something called RSI lower band which you're going to make it 20. All right, then click on OK. Now the value which you modified was that this pink region. So if the price is below 20, now basically if I just take the cursor upwards, you can see that the RSI value is increasing. On the right side you can see that 38, 39, 40, all that. So if the RSI value is below 20, then we can tell that the stock is in a oversold condition. All right, if the RSI value is above 80, then we're going to tell that the stock is in a overbought condition. Means if the stock is oversold, that means the price has come very 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 down, and now the people think that the price is too much oversold and people be ready to buy. Similarly, in the oversold condition, the market feels that the price has been a kind of overstretched and now it needs to correct. So that's when RSI comes into play. Now basically, as I told in the first, that it is a momentum indicator. Basic use of RSI is to find out overbought and oversold condition, but that doesn't really work out in trading. You can't just trade based on overbought and oversold condition. In order to improve the prediction, we are going to apply divergence. So let's move on to the first type of the divergence, that is the bullish divergence. Now if you listen to me for the next 10 minutes, then I assure you that you're going to understand what is the divergence phenomena
and you will be applying this in the live trading and you can make hell lot of money. Alright, so the chart shown here is of IndusInd Bank. Now if you just look at IndusInd Bank on 25th April 2022 at 9:15, the price was 940. So on the right side you can see that the price around this range was 940, right? And what is the RSI value over here? So RSI value over here is 14, right? Again, when the price went up and came down, this time the price is lower than the previous support. So when the price came near 937, can you tell me the RSI value? The RSI value is around 30. Now, do you think that the price is falling but RSI value is increasing? So there is something happening, right? So this phenomena is basically called as a divergence. So when the price is falling, the RSI value is increasing, which means the momentum in a stock is increasing. So this phenomena, as I told, is called as the divergence. Now, as soon as you spot a divergence, that in this case it is a bullish divergence, do you immediately go to buy? No, you're not going to buy until there is a triggering point. Now, what is that triggering point? Now, in this case, if I tell you, the triggering point would be this. If this high, that is the recent resistance, is breached, then you can initiate a trade and you can go long. So basically, if I tell you all, RSI chart is just to spot divergence and then you're going to take action based on the price action. So once again, I'm just telling you all, so you're going to observe divergence in RSI chart, like if there's a bullish divergence or a bearish divergence, and you're going to take action based on the price action. That's simple, right? Alright, now let's move on. Now if I just show you the back history of IndusInd Bank, on 12th April 2022, 9:30, the price of IndusInd Bank, you can see here, it is around 968, right? And the RSI value is around 27. Similarly, when the price came to a same point near the support, the stock value is still the same. It is 968. Now, when you compare the stock price with the RSI graph, do you see there is something different in the both? So basically the concept here is of bullish divergence. You can see when the price is still consolidating or when the price is still in that same range, the RSI value is trying to go up. So this is a phenomena where we call it as a bullish divergence. Alright. Now again, my second question is, now you spotted RSI divergence in the graph, but do you immediately go to buy as soon as you spot a divergence? No, you need to find a triggering point. Now where is this triggering point? So obviously it will be in the chart. So if I would tell you, the triggering point in this case would be when it breaches the resistance, when this resistance was breached with this green candle, that is where you're going to take an entry and then you can go long. Fine. So now to move on, let's go on to the next stock, that is in Hdfc. Now in Hdfc, if you just see on 19th April, the price was around 2175 and the RSI value is approximately around 15. Similarly, when the price starts falling, or I would say when the price started forming lower highs, the RSI value over here is 23, which clearly says that the price is falling, but the momentum is gradually increasing. So this is again a divergence. So you can see over here, the momentum has been increasing, right? Now again, you have to find a triggering point. You are not directly going to enter. Now you're going to enter when this resistance is breached, and exactly somewhere around this point you can see that the momentum is gradually increasing, but the price is actually consolidating, and this is where you're going to enter a trade based on divergence. Fine. All right, now same thing even happened in Hdfc. You can see here the price is falling and the momentum is gradually increasing, the same price action. When the day's high is breached, you're going to take an entry, but here we didn't really get an entry because the resistance was on the top. So this was never breached. So going to the next stock, that is in Nifty. Going to the next type of divergence, that is the bearish divergence. This divergence happened today in Nifty, that is on 29th April. Alright. Now if you just see, Nifty is forming a higher high kind of a pattern. Correct. Now what is RSI doing? RSI formed a higher high, but later on you can see that the momentum is gradually falling down. Now in simple words, if I just show you all, Nifty is going up, right? But in the RSI chart, you can see that the RSI value is dropping. Basically, the graph is dropping, which is a sign of a phenomena called as RSI bearish divergence. Now, again, are you going to directly short it? No, you're going to have some triggering point in the chart. So in this case, I'll be keeping my triggering point as this trend line, or you can keep days low. Now this was the day where it started. Initially there was a sell off and then the price went up, and then you can keep this as a support, that is the days low. Usually days low and days high will act as an important support for the intraday perspective. All right, now in this case you can see that clearly there was a breakdown from the days low, right? And you can see that RSI value also was dropping, so this was a triggering point to take a short position. This happened in Nifty. Now talking about Bank Nifty also had a similar kind of a pattern. Now if you just see, if I just draw the days low support, you can see that this support was breached, and then there was a small pullback, and then there was a massive fall. Now in the chart also you can see that there is kind of a drop in the RSI value. So the price was going up, but the momentum was actually dropping. So this was one of the example in Nifty and Bank Nifty. Now going to the last talk, that is the last example for bearish divergence, is Tex Macro Rail. So in Tex Macro Rail, you can see that on 22nd April at 9:15 there was a bullish candle, and thereby the price started slowly falling. And next day, when the price came again near the previous day's high, that is around 58 rupees, you can see that the RSI value is actually dropping, which means the price is forming a kind of a double top. Okay, so double top is basically, it's a bearish pattern. We short double top when it breaks the neckline. Now forget about all that. Now we are going to talk, we are talking about divergence. Now in this case, we spotted a divergence in RSI. What next? We are going to find a triggering point in the chart. Now since I told you, this is first confirmation that this pattern is a short, was that it has formed a double top, right? Second, you have spotted a divergence. Third, can you see that this support around 55 was breached, and this is what is going to act as a triggering point, and thereby you can take a short position. Okay, so these were the few examples of RSI bullish divergence and bearish divergence. So I'll see you in the outro. Alright guys, so I hope after watching this video you should be in a position where you can spot the divergence, and based on the the setup we spoke about, the trigger, you are able to take the proper trade. Now one of the most common question which majority of the people ask me is that which time frame is better to spot divergence, and which works faster. Now being honest, divergence works in all the time frame. For intraday you can use 5 to 10 minutes, and for the swing trade you can you use up to 1 day to 1 hour. Now the only difference that happens is that the longer time frame you use to spot the divergence, the slower the movement will be. The shorter time frame you use to spot a divergence, the faster the movement will be. So that was one thing. Second thing is, which divergence? Is it the bullish divergence that works most of the time, or the bearish divergence? I personally feel that majority of the times bullish divergence setup works. So whenever there is a bullish divergence setup, make sure you do not miss out those kind of setup if it is giving you a proper risk to reward, or if it is coming under your risk appetite, then do not miss out such trades. So with this, we'll end this video here itself. Make sure you subscribe to this channel, like the video, and share it with your friends who really want to improve their trading. So happy trading, and I'll see you in the next one.